Welcome back to my OFW Mindset Reset channel, where we dive into the secrets of the world's wealthiest folks so you can get rich beyond your dreams. Today we're diving into the mind of a man whose name is synonymous with success in the financial world. Did you know that Warren Buffett, one of the richest men alive, built most of his fortune using one simple principle? No, it's not luck. No, it's not secret investments. It's something you and I can use too. Compound interest. Yes, the same force that can turn a few dollars into thousands over time. Buffett calls it the eighth wonder of the world, and now we're going to reveal exactly why. Ready to unlock your true wealth? Welcome to Mindset Reset, your go-to for financial freedom. This channel opens the door to endless earning potential. So smash that subscribe button and don't miss out on any valuable insights. And now, without further ado, let's get back to the topic at hand. Warren Buffett on compound interest, the wealth machine. Number 1. What is compound interest? Let's keep it simple. Compound interest is when your money earns money, and then that new money also earns money. It's growth on top of growth. Think of it like a snowball rolling down a hill. At first it's small, but as it keeps rolling, it gathers more and more snow, and soon it's massive. This is the snowball effect. So let us say you invest just $100 per month and earn an average return of 8% per year. In 40 years, you wouldn't just have $48,000 saved. Number 2, Warren Buffett's story. Warren Buffett didn't start as a billionaire. In fact, by age 30, he had a modest fortune compared to today. But here's the key. He started investing when he was just 11 years old. Now fast forward to today. His investment firm, Berkshire Hathaway, owns over 40 companies. They range from insurance to railroads to consumer brands. But here's the big question. How did he turn his small investments into a financial empire worth billions? The answer: compound interest. It took him decades to master this art, but remember, he started when he was just a kid. By the time he was 60, he'd already made millions. But here's the plot twist. 90% of Buffett's total wealth came after he turned 60. Why? Because the longer you let compounding work, the faster it accelerates. Time is the secret ingredient. The earlier you start, the better. Let's look at it from another angle. If you start investing in your 20s, you could retire in your 50s with a comfortable nest egg. But if you wait until your 30s, you might need to work longer. And in your 40s, well, you're definitely going to need to work longer. The bottom line, the sooner you begin, the sooner you'll reach your financial goals. Number 3, the math behind the wealth machine. Now, let's talk numbers. Buffett's average return has been about 20% annually through Berkshire Hathaway. To put that in perspective, the stock market average is around 8%. Now, that might seem like a small difference, but it's the consistency over time that makes all the difference. You see, a 20% return means that if you invest $1,000, you'll earn $200 in profit. But that profit isn't just for show. It's reinvested, meaning your new balance of $200 will earn you 20% of that. But here's where things get interesting. When you reinvest your profits, they also start earning profits, creating a chain reaction. This snowball effect is what Buffett calls the eighth wonder of the world. To understand how this works, let's do some quick math. If you double a penny every day for 30 days, you don't get a few dollars. By day 30, you have over $5 million. That's exponential growth, and that's what Buffett tapped into. But remember, this isn't about overnight riches. This is about understanding the power of consistent growth over time. This means sticking to your plan, staying focused on long-term goals, and avoiding the temptation to cash out too early. It's a game of patience. Number 4, how you can use compound interest. Now you might be thinking, great story, but how can I apply this in my own life? Well, it's easier than you think. In fact, you're probably already familiar with some of the tools that can help you take advantage of compounding. Buffett himself recommends 5 steps to harnessing this powerful force. First, start early. The earlier you invest, the more time compounding has to work for you. Second, be consistent. Keep investing regularly, even if it's just a small amount. Remember, it's the consistency that makes the difference. Third, reinvest your earnings. Don't cash out too early, let your money keep growing. Fourth, be patient. Compounding rewards those who wait. Finally, diversify. Don't put all your eggs in one basket. Spread your investments across different assets to reduce risk. Remember, you don't need to be a stock-picking genius. You don't need to hit home runs every time. Just focus on making consistent progress over time. Number 5, Buffett's mindset on compounding. When it comes to investing, Warren Buffett is a firm believer in the power of simplicity. He's often quoted as saying, "Rule number 1 is don't lose money. Rule number 2 is don't forget rule number 1." This philosophy is deeply ingrained in his approach to investing, and it's a mindset that can be adopted by anyone looking to build wealth. At its core, Buffett's approach to investing is rooted in patience and discipline. He's not interested in chasing quick wins or trying to time the market. Instead, he focuses on finding fundamentally strong companies with a competitive advantage and holding them for the long term. Buffett is known for his value investing strategy, which involves identifying companies that are trading below their intrinsic value and have the potential to grow over time. He's also a big proponent of diversification, spreading his investments across a variety of sectors and industries to reduce risk. Buffett's investment strategy is not just about making money, it's about building wealth and providing financial security for himself and his family. He's not afraid to hold on to investments for decades if he believes in the long-term prospects of the company. He's also willing to walk away from a deal if he's not comfortable with the price, even if it means missing out on a potential opportunity. Buffett's investment approach is not for everyone. It requires a lot of patience, discipline, and research. However, his track record speaks for itself. Over the years, he's built a fortune that has made him one of the richest people in the world. And finally, let's talk about the elephant in the room, Buffett's age. He's in his early 90s and still going strong, but many people wonder how much longer can he keep up this pace. After all, he won't be around forever. However, Buffett's approach to investing doesn't rely on his longevity. His portfolio is diversified and well managed, so it can continue to grow even if he's not around to oversee it. Ultimately, Buffett's investment strategy is a testament to the power of patience, discipline, and a long-term focus. It's a mindset that has made him one of the richest people in the world, and it's a mindset that anyone can adopt if they're willing to learn from the best. We hope you enjoyed this video. If you found it helpful, please give us a thumbs up and subscribe for more content like this. We appreciate your support and look forward to seeing you in the next video.